Hi everyone, today I'm talking about 10 US stocks to watch, and these are 10 companies that I've really identified as companies that I want to buy if there's a stock market pullback. And these are 10 companies that I really want to buy in if the price is right. I'll try run through some prices and where I would actually buy at. But as always, if you can smash that like button, that'll be absolutely amazing. And we'll get stuck into the video. Now, before the video starts, I have set up a Patreon on here. I've put a lot of extra content on there. I've also set up a Discord group. Hopefully this will be the biggest UK investors community out there. So if you want to go and do that, then the link is in the description. But we'll get stuck into 10 stocks to watch. And number one, this is probably my priority right now, is Tesla. Now, for you guys that are new to the channel, I did own Tesla not so long ago. I sold out about February time, and I made a 250% gain on Tesla, which was amazing. But it's a company that I still love in the long term. I only sold out because I felt like the price had gone up way too much and there'll be a better opportunity to go in buying it. And to be honest with you, I had that opportunity in the stock market correction, and to be honest with you, I should have really bought there. But Tesla, you know, it's hard to explain Tesla why I want to get in within like a minute. I'm going to try to spend a minute on each stock, but obviously it's the leader in electric vehicles. There's so much you could say about Tesla, but the leader in electric vehicles and the demand for electric vehicles will increase. You know, when you look at the technology, like the Model 3, it's so far ahead of what everyone else is offering. And when we look at the Model 3 and other vehicles they're making, some of the other vehicles are fantastic. We should get the semi-truck coming out very soon, the Cybertruck coming out very soon. And that's without not getting onto all the technology of the batteries, for example. So for me, Tesla under $500 would be an absolute bargain. So that's probably number one on my priority list. Number two is Microsoft, a company that I own, a company that used to be my favorite company. I'd say it's probably my second favorite company right now. But Microsoft is a company that I used to, from about 2016 to 2018, said it was the number one stock on the stock market to invest in. And I am up on my position, and it's one of the companies on this list that I could kind of never see myself selling, to be honest with you. When you talk about Microsoft, it's still a pretty cheap PE. You pick up a nice little dividend. It also has very multiple income streams when we talk about cloud, the Xbox, Microsoft Office. Anything around about $160 to $170 for me is an easy pick up in Microsoft. Very, very safe company, a very diverse company. It's a company that I rate 5 stars, and it's a must in a portfolio from my kind of opinion. Number 3 is my favorite stock on the stock market, which is Facebook, FB. I think it's a company that's always been disrespected with some fantastic growth, and it's starting to realize the potential, or should I say, other investors are starting to realize the potential with this one. It's still trading at a pretty low PE, which is fantastic. The EPS is fantastic. The growth is going to be fantastic. It's got multiple platforms. Even now, if the user growth isn't great on Facebook, I think Instagram has the potential to have more users than Facebook. And obviously the demand for adverts on there will carry on increasing, and the price will go up for these adverts, and Facebook will make more and more money. Absolutely fantastic balance sheet, which can lead it to do whatever it wants really and go buy another platform out there. I think anything below $180 on Facebook is a definite buy. Number 4 is Google, and Google is a company that I should have really bought on the pullback. When you think about Google, obviously you've got the search engine, obviously you've got the adverts on there, very much like Facebook. You know, them two platforms are kind of leading that online advertising industry. You get YouTube, and YouTube I think has so much potential still going forward. Massive EPS growth, massive revenue growth. It has other things going on the side as well. Probably the best balance sheet out there right now. Pretty much could go by any company that it wants to, and I think that really another company I should have really bought in March, but anything under 1,200 for Google is definitely where I'd start buying. Number 5, Amazon. I'm going to keep this short and sweet because I'm sure this one doesn't need much talking about, but basically, you know, if Amazon comes into your industry, you're pretty much screwed. Amazon is a fantastic company. Massive growth, under $2,000 in my opinion is probably a good buy, and it's another one that I've never owned, but I should really own Amazon at some point. And yeah, I mean, you've got obviously the Amazon Web Services. It's pretty much going into nearly every industry now, so yeah, Amazon under 2,000, easy return in a 2 to 5 year hold. Number 6, I put Visa. Could be MasterCard, but I prefer Visa over MasterCard. Under $170, easy for this one. You're going to have massive payment growth going forward. You're going to have a lot of more the younger generation that pay by card. You've got a lot more developing countries that will be paying by card. So Visa is going to capitalize on that. It has a decent balance sheet. It's trying to get into this fintech space and buy a lot more companies. Visa, for me, it was one of the easiest holds to have in your portfolio. You'll easily get probably an annual return of 20% on this stock at least, and that's in a bear market. In a bull market, you could get even more than that. Number 6 is Adobe, probably one of the companies that dominates its area so much. It's probably the untouchable in the software industry. It is the market leader by far. It also likes buying a few more companies to help it grow its revenue. It's always said it tries to keep a 20% revenue growth where possible. EPS is pretty good. It's a company that I used to own in about 2017, 2018, and yeah, easy company to make money on. You just hardly get any dips in it. Under $300 for me is something that's worth a pick up in this company. Number 8, Square. Square is a company that I owned. Is pretty much, I think it was one of the first, if not the first company I ever owned when I started investing into the stock market. I bought this company at something around about $20. I sold out about $45 just because the valuation got way too much, and this was back in about 2018. But this company will capitalize on a lot of the smaller growth companies that need card payments, and obviously it's got other income streams now. You know, it's just got approved to be a bank. I'm going to make a full video on Square actually at some point. But Square is going to capitalize on the smaller companies that need card payments. And when we think about Square, it probably should be a lower price than this right now. It is at a very high premium. You know, the industry it's in, a lot of these smaller companies aren't operating right now. So the Q2 should be pretty horrible for Square. So we might get a pullback on it. But for me, anything under $60 for Square is pretty much a buy. So it's a company that I would like to add back into at some point if the price is right. Number 9 is Starbucks. And this one kind of snuck up on me on like how cheap it was off its 52-week highs. And I'm not a massive Starbucks fan, but when we talk if Starbucks get under $60, I'm like, this stock's pretty cheap really, because you're going to pick up that dividend. It's a very safe company. People always need to get their coffee hit, and it's going to just have steady little income stream growth, revenue growth, and pay that dividend. And yeah, I think it might be slightly undervalued under $60, and it offers you a bit of offers you a bit more of a diverse portfolio being in there. So depending on what happens with Starbucks, I might be tempted to actually buy it if if it goes down a little bit from here. So yeah, Starbucks is number 9. And number 10 is Disney. Under $100 for Disney for me is an easy buy. Obviously you got the theme parks starting to open back up, the merchandise, the films will carry on coming out, and obviously you get that Disney Plus, which for me is absolutely massive for Disney, and I think that will help it grow double-digit revenue going forward over the next 2 to 5 years, and eventually Disney will be a $200 stock in my opinion. And yeah, that Disney Plus growth is absolutely fantastic for Disney, and if I can pick this up for $100, I will do whenever the opportunity is out there. So guys, those are my 10 stocks to watch and what prices I'll try getting at. I hope you enjoyed that video. Let me know what stocks you're watching, if there is a correction, and stocks you're waiting for the opportunity at, and what price you're getting at. That would be absolutely amazing. Like the video, subscribe if you haven't, and I'll see you on the next one.